Hi there, I'm Andy and welcome to my channel. In today's video I want to talk about what happened in crypto this week. More specifically, three main reasons why Bitcoin crashed this week, how or why this crash was worse than the crash we experienced when FTX collapsed in November last year. And also, well, is Bitcoin and crypto overall actually dead? What does it mean, what this crash means for crypto market cycles overall, and how this crash and the current state of the crypto market compares to the previous bear market. So if you're looking at the chart on Thursday, it was a pretty nasty day. Bitcoin dipped around 12% or around $3,500. And it all happened in a very, very short space of time. Large part of this dip was literally like 4 minutes or something like that. It was pretty much instant. So what actually happened? What contributed to this crash? First of all, Fed released minutes from their last meeting. And the main thing that should be noted here is that generally the market expected that the situation is now improving, as in financial situation overall is improving, inflation is coming down, and therefore there will be no future interest rates in the US. But actually, at this last meeting, there was some concern that inflation may start going back up in the US, and there may be a need for further interest rate increases. And that's something market didn't expect. So as a result, all the markets, not just Bitcoin or crypto, but also stocks and bonds, everything went down. Not quite as drastically as Bitcoin, but everything dipped on Thursday, because basically the market was not expecting this news. The second thing, and that's something that impacted Bitcoin quite heavily, was the report that SpaceX sold 373 million worth of Bitcoin, which is basically its whole remaining Bitcoin position. And of course, that caused quite a fair bit of FUD because, well, SpaceX belongs to Elon Musk. It's no secret that whatever Elon Musk does or his companies do impacts crypto space quite a bit. But the thing is that this was a report that was published in Wall Street Journal, but actually it was in no way confirmed. And so far, still there is no clear confirmation whether actually SpaceX sold this Bitcoin or not. But of course, on the day that the fact that this news came out and before anyone had a chance to verify it was enough to send the market further down. And like I said, well, that's already second reason why Bitcoin was going down. We already had Fed minutes, then SpaceX potentially selling all its Bitcoin. And then the third thing was the bankruptcy of Evergrande. So Evergrande is a huge Chinese developer. It's the first or second in terms of size in China. And they've been struggling financially since 2021. And since 2021, they were supposed to restructure their debt. Then I think they recorded another $81 billion worth of losses or something like that. And basically now they filed in the US for bankruptcy. Property market amounts to about 30% of all China's growth. So of course, collapse of a big developer, it's really, really bad news. And also, Chinese economy has been a bit of a concern for quite a while now. So there is, of course, big risk that this is only the first one of many bankruptcies that will happen in their market. And of course, that would have a huge impact on other countries as well. So these were the three main reasons why Bitcoin crashed so much on Thursday. First of all, the fact that inflation may start going back up, and therefore interest rates may need to start going up again. Second, potentially SpaceX selling its whole remaining Bitcoin position. And third, collapse of Evergrande. But also, those three things happening started sending price of Bitcoin down. And then there was another important factor, and that's one thing that made this particular crash in a way worse than the one when FTX collapsed. If you look at the Bitcoin's chart, actually the volume on that day wasn't that big. If you look at this red volume candle here, I mean, it was of course above average, but it was nowhere near as some of the candles we've seen recently. I mean, look at those, for example. And if we go back to November last year, I mean, that's how high the candle was on the collapse of FTX. So the volume was really low during this crash. But actually what was happening is A lot of traders got a bit cocky recently and a bit too comfortable with the leveraged positions, because when we had this nice period of growth here, well, that was largely driven by the announcement of upcoming multiple Bitcoin ETFs. Essentially, the market sentiment around Bitcoin was quite bullish. So a lot of people opened leveraged positions, hoping that the price will keep going back up or continue going up further and further. So essentially, we were hoping that the price will be bouncing here and then going up into like 35,000, maybe closer towards 40,000 even in a relatively short period of time. But what happened instead? Well, the price started coming down quite rapidly because of those three main events. And that started triggering liquidations. And as a result, we had about 1 billion worth of liquidations in the crypto market, which then, of course, sent the price further down. So that was the big issue on Thursday, that basically a lot of leveraged positions were liquidated because of that sudden move down. And in fact, many more leveraged positions were liquidated this week than in November 2022 when FTX collapsed. When FTX collapsed, it was a lot of people just selling in general because everyone thought that that's the end of crypto. Here, it was relatively few positions, but well, heavily leveraged. That's what sent the price further down. So that's what happened on Thursday. But what does it mean for Bitcoin, crypto, and well, how does it compare to the previous bear market? Well, of course, this move down is not great. We are back at the prices where we were in mid-June, but that's not the end of the world. It's only a couple of months really, and with a bit of luck, Bitcoin may start recovering those losses relatively soon. Like I said, this drop was about 12%. We can actually measure it. On that day, it was literally just over 12% or around 12%. If we go to the previous bear market, so that's this period right here, right? That's previous market cycle top. That was the bear market in between. And here we had COVID crash. I will ignore COVID crash because, of course, that's something that was completely unexpected. And as you can see, a couple of months before or a month before, we were already sort of recovering and going up. And I would argue that if not for COVID, that previous bull market would probably continue from this point up. If we go and look at what happened here in the previous bear market, that was market cycle peak. Of course, big crash going sideways for a bit, then secondary crash. That was the market bottom here, going sideways around $3,500, $4,000, then up, then quite significantly up. Bear in mind that the bottom was just over $3,000, and then we went up to almost 14,000. So massive move up, right? And then a lot of sideways movement, a really choppy one, but generally down, right? We have a clear downtrend here. Lower highs, sideways movement, and then COVID crash. But if we zoom in on this period here, so we are past those market cycle lows, we're ignoring COVID crash, so we're basically looking at this period here. If we look at what happened here, for example, here over a couple of days, we had a quite significant pullback that was around 14% or so. Then we had another one here, quite a big red candle. That one was to the bottom of the wick, that was over 15%. Then we had another pullback over 3 or 4 days, but that was almost 20%. Then another one here, actually, if we look at what was happening here, that was over 20%. So basically in this period here from sort of where we are, June 2019, late June 2019, until pretty much end of 2019, we had a lot of significant pullbacks in a range of between 10 and 20%, or even in excess of 20%. Some of those were single day ones, some of them over 2 or 3 days, but big pullbacks. And Bitcoin halving was, I think, in May 2020. So basically, we're talking here about the period sort of between 12 and 6 months before the halving, which is exactly the period we are in right now. So actually, if you compare this price action in the previous bear market to what's happening right now, it's not too dissimilar, right? We could speculate that, there's a very good chance that this was the market bottom around 15K or so. So this would be similar to that period when in the previous bear market prices dipped to around $3,500. And since then we've been sort of gradually going up with some significant pullbacks like the one here. There were a couple of pullbacks here and another one, the most recent one. But this is nothing unusual. This is basically just a normal Bitcoin's price action. As I said in my previous videos, we can expect that the market will be quite choppy for a while. I was saying multiple times that I expect price action to be really choppy between now and early next year, and then potentially picking up towards the halving, which we expect to be around April next year. Potentially some sort of by the rumor, sell the news kind of thing around the halving itself. And then after that, we have a clear move up. But certainly until then, I expect the price action to be quite choppy. So overall, I think nothing really has changed. Pretty much everything as expected, ups and downs, as it's usually the case in crypto. And yeah, in general, just buy the dip, sit back and enjoy the ride and just wait for the next halving and everything that will happen after that. So yeah, I think that's it from me in this video. I hope you found it interesting. If you have any questions or any comments, please put them in the comment section. If you would like to learn more about crypto, check out my website and my course, Crypto Like a Pro. And thank you for watching. I'll see you next time. Bye.